Ladies and gentlemen, good day and welcome to the Meson Walls India Limited H2 and FY'24 earnings conference call hosted by Venstra Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company which are based on the belief, opinions and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Kaushal from Concall Partners. Thank you and over to you, sir.
Thank you. Good day, ladies and gentlemen. On behalf of Concall Partners and Venstra Securities, I welcome you all to Meson Walls India Limited H2 and FY'24 earnings conference call. The company is today Mr. Brijesh Madhav Marekar, Chairman and Managing Director, Mr. Swaroop Matekar, Promoter and Whole-Time Director, Mr. Kishore Makwan, CEO and Executive Director, Ms. Vijaya Shapurkar, CFO. I would like to hand over the call to Chairman and Managing Director of the company, Mr. Brijesh Madhav Marekar, for his opening remarks. Thank you and over to you, sir.
Thank you, Kaushal. Ladies and gentlemen, good afternoon. A warm welcome to each of you as we gather for the conference call of Meson Walls India Limited, where we aim to delve into our exceptional performance during H2 and FY'24. Before we go into the specifics of H2 and FY'24, please allow me to provide a concise overview of our company. Meson Walls India Limited has swiftly emerged as a leader in assembly, manufacturing, purchasing, distribution and servicing of an extensive range of products, including valves, actuators, strainers and remote control systems for various industries. Globally recognized as the valve specialist, we excel in the design, manufacturing and supply of broad array of valves made from both ferrous and non-ferrous materials. With a diverse product portfolio of over 25 SKUs and a robust order book of exceeding 40 crore, we serve B2B customers across defense, marine, offshore, oil and gas and other industries. We are continually expanding our product range, including the introduction of filters to adapt to evolving market needs and better serve our clientele. Our unwavering commitment to quality, innovation and customer satisfaction has cemented our reputation as a trusted industry partner. We also provide comprehensive installation and maintenance services, ensuring our clients to achieve their optimal product performance. Operating from a state-of-the-art facility in Bambori, Pune, equipped with advanced CNC machines and testing machinery, we guarantee that every product meets the highest quality standards. Our dedication to excellence is further validated by our ISO certifications, which reflect our stringent standards in the design, development, manufacturing and servicing of our products. Our strategic growth includes a pivotal foray into manufacturing aimed at broadening our operational scope and delivering superior products by leveraging our established expertise. Our recent joint venture with Meson Walls Naval Limited is designed to enhance our value-added services, significantly boosting clients' throughput. Aligning with global trends, we are intensifying our focus on serving the defense sector and addressing environmental challenges, reflecting our commitment to sustainability and social impact. Our license agreement with Georg Schönnemann GmbH, Bremen, Germany, authorizes us to utilize their critical expertise in filters, manufactured products and inserts. This collaboration also provides us with the added benefit of technical assistance from Georg Schönnemann GmbH, ensuring the optimal use of technology. Our recent listing on the BSE SME platform in September 2023 marks a significant milestone in our journey, underscoring our financial robustness and market credibility. At Meson Valves India Limited, we are poised to harness these growth opportunities, delivering exceptional value and innovative solutions to our clients worldwide. The global industrial valve market is projected to grow from $80.4 billion in 2023 to $99.8 billion by 2028 at a CAGR of 4.4%. In India, the industrial valves market was valued at $2.6 billion in 2021 and is expected to reach $3.7 billion by 2028 with a CAGR of 5.2%. India's strategic initiatives, including increasing defense exports to $5 billion by 24-25 and a 5.8% increase in capital allocations for modernization and infrastructure development of the defense services to $20.7 billion, underline the significant growth opportunities in the sector. Furthermore, as the third largest economy and oil consumer globally, India's oil demand is expected to rise from 40% to 6.7 million barrels per day by 2030 and further to 8.3 million barrels per day by 2050. The Indian water and wastewater market is also anticipated to grow at a 9.7 CAGR, reaching to $2.08 billion by 2025. Commenting on the financial highlights of H2 and FY'24, it is evident that Meson Valves India Limited has demonstrated remarkable resilience and strategic progress. During H2 FY'24, the company's total revenue increased significantly to 43.38 crore rupees, showcasing its adaptability in an ever-changing business environment. The EBITDA was rupees 10.83 crore with a robust EBITDA margin of 24.96%, reflecting operational efficiency. The notable profit after tax PAT of rupees 6.44 crore with a PAT margin of 14.85% further underscores Meson's financial strength and sound decision making. Additionally, the earnings per share stood at rupees 7.39. For the full fiscal year of FY'24, the company's total revenue increased significantly to 63.32 crore rupees, again highlighting its adaptability. The EBITDA was rupees 4.95 crore with a strong EBITDA margin of 23.61%, indicating continuous operational efficiency. The PAT was rupees 9.05 crore with a PAT margin of 14.3%, underscoring Meson's financial robustness. The earnings per share for FY'24 was rupees 10.38. Looking ahead, Meson Valves India maintains an optimistic outlook grounded in its strong H2 performance and strategic initiatives aimed at achieving the industry prominence. The company's consistent growth and financial stability position, we are favorable for continuous success in dynamic market landscape. Before we go into the question answer session, I want to express my sincere gratitude to all our stakeholders for being an integral part of our growth story. Your support and involvement has played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for question and answers. Thank you once again for your presence and continued support.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if we have any question, please press star and one on your telephone keypad. First question comes from Nahima Rathod from Tiger Assets. Please go ahead.
Hello. Am I audible?
Yes,
Hello.
ma'am.
Oh, all right. Congratulations on the great results. I had a few questions. So, in FY'23, we've seen a decline in our exports. So how does the company plan to balance its revenue between domestic and international, given the recent international order from KW Engineering Solutions?
Your question is that your concern is that our exports have reduced, or?
Yeah, so the exports, so for in FY'22 they were around 7%, and now they've decreased to almost 1.5% in FY'23.
Okay.
So yeah, so
I got your question. So what has happened in the past, that in the last year there has been so much new projects which have been announced in defense sector of India. And
okay.
Also, if you see the maritime vision, Amrit Kal 2047, Indian government is pushing for the defense stronghold. Lot of new projects in defense are coming. So our capacity utilization was almost 100% just for
Okay.
domestic. So that is the reason why we strategically did not go for export, because the demand from domestic was very high. Even in the coming future, we see a huge demand from the Indian local PSUs with the defense, maritime, marine, and as the things are progressing, we see that there is a huge surge in the local domestic shipbuilding projects, naval projects, where we have to also significantly gear up. So where we are working at present to gear up our facilities by adding some capital expenditure machines, CNC machines, all these things. This is the reason what we are doing. And at same time, we are also focusing at export market because the geopolitical situation also today demands that India is in a favorable position. So now, catering to domestic, we are looking at going for export markets like US, Canada, Russia. I think our CEO, Mr. Kishore Makwan, can you just also brief on what kind of opportunities we can look into, we are planning to look into in future for export?
Yeah, yes.
Mr. Kishore?
Hello.
Yeah, over to you.
Yes, thank you. So, regarding the international market, as we are into the niche market of the non-ferrous wall, so considering now majority of the walls manufacturers, they are into the ferrous wall manufacturing. So considering non-ferrous wall, yes, definitely we have a huge potential, as what our business manager has already told. So now we are taking care of all the export requirements. So we have started our activities to market our product for the globally. Considering, as he rightly told, yes, after the addition of the machine, we will be having a spare capacity for handling all the export orders also. As far as concerned, regarding the new certification requirement, we are also catering to the new certification requirement which are required for exporting our product globally. So, considering the non-ferrous market, there is a huge scope for considering all the sectors where non-ferrous walls have been used. So definitely we will be ready to capture all the global markets for that.
Okay.
Thank you. Thank you, Mr. Kishore. Yes.
So, like you said, like for example, you said defense sector is somewhere where you're looking for good projects that are coming in. So, is that the most lucrative sector that you would say, or other sectors like oil and gas and power and generation probably? And how are we looking at taking advantage of government initiatives in the other sectors as well?
Mm-hmm. So our niche, like Mr. Kishore has said, our niche is non-ferrous, Non-ferrous,
Okay.
there are so many valve manufacturers in India, but hardly around less than 5% are in non-ferrous. And that too, the
Okay.
quality standards which the naval industry demands, to meet that standards, even you can say that the figure drops down further. So we are one of them. So
Okay.
our main focus is niche because defense industry is growing at a very unprecedented pace. We are, apart from valves, we have just recently ventured into a joint venture with Meson Naval Limited, where we are trying to provide value-added services to our clients, Indian Navy and the PSUs, defense PSUs, whoever are into defense sector. So that itself will provide us a very good revenue margin. And secondly, the competition in this segment as of now is much less than what we can see in the other sectors, which are mature sectors. We can say oil and gas and other industrial sectors are mature sectors. There have been so many players, so much of competition. Of course, we have the product range to go into that, foray into that sector, but the defense industry itself is growing at a pace. I think our revenues, more than 50 to 60% revenues will come only from defense. If we focus and continue our product foray expansion, continue to give more value-added services to our clients, our revenue, we will be having a very stable and sustainable and good revenue with good margin from defense and marine industry. So that is a strategic decision what we have taken. Of course, at the same time, like you said, government is taking initiatives in other industrial sectors also. And we are looking, we have already developed a team in sales and marketing, and they are focusing on where we can have an opportunity in other sectors like oil and gas, nuclear power, because the products, whatever are used, are same. And once we have the highest quality norms met, to meet the other industry standards is a little bit easier for us.
Okay.
So,
Yeah. I also want to add. Hello.
Yes. Yes, Mr. Kishore, please.
Yeah. I also want to add more into that. Yes, you are right. Apart from marine and defense, we are having a lot of scope in oil and gas and other sectors also. In fact, presently also we are executing some of the orders of power sector, where we are providing the walls to the actual end user is NTPC. Apart from that, oil and gas also we are supplying, but as Mr. Brijesh has told, that we are concentrating on the critical areas where we can show our expertise. So we are providing walls to the multinational, leading multinational in the oil and gas like HPCL, IOCL. In fact, we are providing walls to the aviation fuel also, which is used, our walls are used in the Mumbai airport, all the aviation fuel line for that also. Apart from that, whatever the critical applications are there in oil and gas, just like hydrocarbon, so we are there to serve that sector also with our critical products for that. And oil and gas also, as we are already into offshore market for that, because shipping and marine industry mostly deals with the seashore. So definitely oil and gas also lot of critical applications are there, where the non-ferrous requirement or our specialized products like triple oxide butterfly valve, top entry ball valves, which are very well used for the in oil and gas also due to their less maintenance and high performance. So our products are already ready for that particular application. In fact, in India we are supplying that also. And considering, as Mr. Brijesh rightly told, and right from beginning we are found we are in the offshore market, seashore market. It will be slightly easier for us to catering the different sectors like oil and gas, power, and we have already started supplying them also. Thank you.
All right. I just have one last
Sorry
question.
to interrupt you, ma'am. Can you join back the queue, ma'am?
Yeah, that's all right. Thank you.
Thank you, ma'am. I request the participants to restrict with 3 questions in the initial round and join back the queue for more questions. Next question comes from Mayank Jain from Purva Publishers Limited. Please go ahead. I repeat, question comes from Mayank Jain from Purva Publishers Limited. Please go ahead. There is no response. The next question comes from Agastya Dev from CAO Capital. Please go ahead.
Am I audible?
Yes, sir.
Thank you very much for the opportunity. Sir, you mentioned that because your entire capacity was utilized for domestic orders, you could not do exports at the scale that you wanted to do. So I was just wondering, what is your full capacity as of now? And are you running at 100% capacity utilization? And what about growth for next year? How do you plan on manufacturing whatever additional orders that you have?
Yeah. So, what we have done today, earlier, before listing on SME, we were almost running at 100% utilization. And after infusion of funds, at the BSE, we have infused capital to increase our capex expenditure. We have bought new CNC machines. We are also integrating a foundry. That is a reverse integration what we are doing. Because these all are strategic markets, and when we are doing export, it's a country image. So foundry plays a very critical role. Earlier, everything casting was getting outsourced. So today, from July, we will be in position to integrate that process also within our production range. So that will help us to scale up our facility, also to scale up production. So to go definitely, what we expect year and year is 20-30%. The foundry is very critical. The timeline delays when you offshore thing, whatever quantities purchase, there is a possibility that there could be delays. That hampers and also it plays a very down part on when you are doing export delays. So we were very strategic in that. Definitely our capacity was utilized, but that was also a strategic decision to focus on domestic first because the demand was that much.
I understand, sir. So after this foundry and the backward integration and whatever additional capacity that you are adding, how much additional throughput can you generate from all your facilities? So, yeah, I can say if we just put it in numbers literally, it will be 30-40% increase, 30-40%. And so are these expanded capacities ready for use today, or we are still finishing?
It is in process. The integration is in process. We expect that another couple of months will go down the line. But that is been identified and we are doing that, yes.
Okay. And sir, you mentioned the backward integration in the DRHP also. So this foundry, once that is commissioned, this will cater to your entire expanded capacity. And what will happen to your margins because of this? If you're backward integrating, theoretically your margins should go up, right?
Yeah. So definitely margins will increase. Shade difference will be there in the margins. Margins will increase only because of this. Mm-hmm. And like I said, the foundry will. See, we expect that foundry has to cater to all our 100% needs. But we are always open. We are developed other foundries also. Right. Keeping everything in one basket is always not good. So even though it will be our foundry, we are commissioning the foundry. So there are always some teething issues could be there. So I think year down the line, you can say maybe next year onwards, the foundry will be fully taking care of all our operational needs. This year, we think that the foundry will take at least half of the load.
Okay.
And half of
Okay.
the load we still depend on foundries, outsource
Outsource.
partners whom we are
Understood.
developing. And because that is a
Understood.
sustainable way, just to say that from day one the foundry will cater 100% needs is just, it is a most, what do you call that, optimistic condition, optimistic situation.
I understand,
We are
sir.
very practical
I
in
understand.
that.
Sir, because foundry is always a high value addition
Yes.
step, right? So I
Right.
was just wondering, can your margins cross 30% once your foundry is fully operational?
No, immediately no, because
No, when,
we are
sir,
also,
on full commissioning and full utilization.
see, there will be a change in 5%. The foundry, it is foundry is not that high value also that it will increase the margin. But today, if we are talking about 13-14% PAT, you mean to say it will not be double just by adding foundry?
No, sir. I meant EBITDA margins. Sir, EBITDA margins are around 25%. 23-25%. If you take PAT margins, so PAT margins, basically what I mean is, will the foundry add anywhere between 3 to 5% to your PAT percentage?
Yeah, it is possible. It is possible, yes. That is the reason, yes.
Okay.
It is possible that the foundry will add to somewhere.
Yeah. Okay.
And to increase the margin at least by 3%. It is possible, yes.
Excellent. Sir, I have one more question, but I'll go back in the queue. Madam, hello. Hello.
Hello, sir.
Yeah, I have another question, but I'll go back in the queue. Since you have put a restriction on number of questions, I'll go back in the queue, ma'am. I'm done as of now.
Thank you, sir. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Saroj Sali, an individual investor. Please go ahead.
Hello, Brijesh ji. Namaste.
Namaste.
Actually, first of all, congratulations for entire Meson team working hard for India, we can say. And as per your previous comments in this Concall, you seem very bullish on defense and marine sector and overall in India. So I hope we as an Indian will do best for our country. And you are acting as a main part of this ecosystem. So congratulations for whatever you are doing. I have few questions regarding Meson. Last time I think 2 months back you have uploaded some notifications to the exchange regarding tie-up with one of the company in Germany regarding I think filter. Okay.
Right.
Okay. So what is your plan? What is your plan to? What is your strategic plan for to tie up with that company? How big that market will be in India, basically, and how that product will be differ from Indian products, you can say.
So that's a good question. What has happened? We are also ventured into water treatment and wastewater treatment solutions. That company has been incorporated, and we have also uploaded notification in that regard. Full-time management is in process to be placed in the company, and the products what are there in that company where we are doing wastewater treatment, this particular filter will be used for that product, mainly for our own consumption. So this filter is different from whatever is available in India, just because today, whenever you are cleaning any filter, especially when it comes to STP or wastewater effluent treatment, a filter cleaning means there is a manual operation involved, possibility of choking, everything. This particular technology from Germany, what we bought, is automatic cleaning facility, what we can give to the clients. So that is a big difference. We provide automatic cleaning solution, no need of manual intervention. It will automatically, periodically keep on cleaning the pre and post filtration. So that is the advantage of that item, mainly for our own production. But we are open to sell it to other industry. As soon as the team is in place, that sales team will take up that, and we will venture for wherever possible. The water industry is growing in India. This filter can be applied in river, farm, fishing industry, river rejuvenation, power sector, desalination, everywhere this filter finds a place. It's a special water filter only. So that we will work on selling this filter in other industry, but our major consumption of this filter will be in-house. That is a specific technology addition to our product. Yeah.
So it will be completely considered as make in India, right? Made in India.
Make in India, and some parts, say around 20% parts will come from Germany. 80% of it will be made in India.
Okay. And one last question related to this only. Now I think there is announcement regarding H2 Dynamics, our another company. Okay.
Yes.
So how you see water as a segment in India, and what's your vision to solve this issue, actually, water issue?
So now this whatever we have been associated with a very experienced team in H2O. The full-time management is in place. The CEO is in place. The director for sales will be in place from July. CTO is in place already. And what I have gathered the information, wherever we approach any client, we are into, first of all, products for that, I'll tell you, is STP, ETP, and drinking water solutions for domestic as well as defense. These are the 4 sectors, products which we will focus upon. And when we go to STP and ETP, where the zero waste water treatment, or today's whatever water is outside communities, we have to treat that water, we find that many industries have installed STP and ETP, but they are not working. There are so many companies in India, they have just supplied the plant, whatever technology, and after 1 or 2 years, there is a very reputed, very big company here, which is renowned. I will not name it here. There, after 1 year, that plant is not operational.
So I want to add.
So Mr. Swarup just wants to add something.
What I want to add that we just started, but the response from the industry is very much overwhelming. Like we almost got 20-25 inquiries right now, and most of the inquiries we are seeing that we can convert it into the business. And there is a real problem there. Whatever the supply happened by our competitor is not so satisfactory. So we are giving them a perfect solution, and we are seeing a promising business.
Thank you, Mr.
Okay. Great. Thanks for the answer, Mr. Swarup and Brijay. So I would like to see H2 Dynamic as a brand in this water segment, as a shareholder of this company. Wish you all the best.
It will be. We are very much confident about that because the technology we have developed is such. Yeah.
Thank you so much.
Yeah. Thank you.
Thank you. Next question comes from Chirag Das from PA and Associates. Please go ahead.
Yeah, thanks, sir. It's great to hear from Meson Valves management. So my question is, with shipping industry set to grow huge in coming next few years, so how important is the positioning of our company being a valves manufacturer? And if you can guide a little bit about the replacement demand and how are our gross margins going to expand in next 3 years? Like in replacement case, is the margins higher? If you can guide about that.
So your question was related to which industry? If you can please repeat. You mean to say replacement industry?
Replacement
shipping.
Industry. Yeah.
Shipping industry, particularly to shipping, right?
Yes.
So shipping industry, that you mean also shipbuilding in covered in that, right?
Yes.
Shipbuilding and shipping, or only specific to shipping? Because
valves are in the initial stage of the value chain. Before the ship gets built, the valves orders are placed. I think so.
Correct.
I wanted to understand about the replacement demand in this valves industry.
So the replacement demand, we are not into that segment as of now, because for that we have to keep a huge stock. The replacement, there are on a ship, particularly so many types of valves, and the ships, whichever are sailing, they sail all over the world, so their demand is to transport one or two valves at wherever port locations they have. And a lot of shipping companies, they demand that you should have warehouses at these and these locations. So our parent company, which is Meson Valve Sweden, they are very much into this shipping replacement business. Their 80% of their business comes only through this day-to-day trade, we call it, day-to-day trading. Because they have put their warehouses in strategic locations like Singapore, Rotterdam and USA. So where most of the port calls go and where most of the ships replacement or small-time repairs are happening. So, but in India, ship repair business will come in future. It's as per the government vision for maritime Amritkal 2047, ship repair will be one of the biggest activity in India. So I think that in a few years down the line, replacement of valves on the ships will also be a sizable amount of business. And we are aware about that, and we may consider that also as an opportunity for us, because we supply valves to new ships, so replacement are also the same products. But I think in next 3-4 years, this is a very good business opportunity, and we are looking into that, sir. Yes.
Okay, sir. My second question is regarding the latest developments what we have put in the exchanges, be it the H2O dynamic or the recently that German company tie-up. So how all these things will translate into the numbers, and how much growth we are expecting for the next few years?
So our motto is very simple. We want to be sustainable. So relying only on one product can also sometimes be, of course, there have been success stories, but what we have found is when we have possibility to expand our products, focusing on particular sectors like defense, water, which have already been being in valve industry, we were aware about this industry. So for keeping focus on that industry, we have added to these products to our portfolio. So I think we will be able to achieve a very sustainable growth of 25-30% year on year. So that is also a target to be sustainable. So I think these water treatment solutions, drinking water solutions for domestic and defense, we are already dealing for valves in defense and shipbuilding. So I think this, with the addition of these filters and addition of the water treatment solution, we will cater to the same industry.
So this filter one it's a unique product. I don't think any peers in domestic, or are there some peers who are already doing it, or is it a completely unique product?
Filters? For the filter,
yeah.
Our particular filter for water is a unique product, because the other people are doing our manual. This is an automatic cleaning filter. It cleans by itself. You don't have to do by putting your hand or something. Normally, whenever there are filters, people have to take out the strainer out. Plus, in this case, it's an automatic filter which we are putting as a salient feature in our STP ETP. That is the main target, main reason for that technology tie-up. It will be a part of our own end product, which is STP ETP.
Got it, sir. And the advanced treatment technologies, like I mentioned, evaporation, filtration, or anaerobic process. So that is also something unique you are doing in industrial wastewater treatment, or other companies are also doing it?
Today, water has become so hot that so many companies are now started to come into that. The crux is, it's not the technology that is the crux. Crux is when we supply a particular equipment, we have what we have seen today. People just supply and they forget it. There is no after-sales service. There is no assistance on operation of the product or of the plant. We have seen in maximum 70 to 80% cases the plants which are supplied are not operational or they are not giving results as per the BIS standards or WHO guidelines. So our focus is definitely technology is unique technology. It is slightly different from what is available in market. We have very expert CTO who is part of our team. And what we will give is we will give O&M, operation and maintenance assistance to the client. That is what we want to give one additional step to them. And we guarantee a longer duration for membrane. When it comes to freshwater treatment, we give a 3 years guarantee to membrane, which other people may not give in this market today. So that is something unique. I think that will help us to gain more market share. Yeah.
Okay, sir. My last question, sir, if you
sorry to
can
interrupt
throw a
you,
little
sir.
bit. Yeah, okay. Okay, thanks.
Thank you, sir. I request the participants to restrict with one question in the initial round and join back the queue for more questions. Next question comes from Varun Jain from Akshaya Vartaman. Please go ahead.
Sir, good morning. Good afternoon and congratulations on the set of numbers. The growth seems quite pronounced in the P&L statement. I had one question regarding the company which had forayed into the...
Hello? Hello? All got disconnected?
No, sir, please go ahead. Varun, sir? So just a moment, sir. Let me check. There is no response. The next question comes from Arshit, an individual investor. Please go ahead.
Hello.
I repeat, yes, sir. Please go ahead.
Yeah, am I audible?
You're audible, sir.
Yeah. Good afternoon, madam. Good afternoon, sir. Congratulations for good numbers.
Good afternoon.
Thank you. Sir, you have mentioned about the JV with the NIBE for value-added products, sir. How big is this opportunity, and is it as good as our existing valve business, sir?
Okay.
Can you kindly throw some light on it?
Yeah, that's a good question. Thank you, sir. That is these shipyards which are building ships today, to increase their throughput, we had suggested them some of the value-added services. What we can give is that whatever job they do, we can do it at our factory. So with NIBE's strength in fabrication and our strength in valve technology, whatever we could combine was to fabricate complete piping systems for the ships. So that is what we want to offer to the. We have already given some proposals, and I think for this particular segment of value-added services, there are not many competitors. So that can give an added advantage to us, and also that will improve in the shipyards or bigger PSUs who can consider us as their strategic partners when they quote for bigger projects tomorrow. We can be called as a strategic partner for them. So as of now, we think that it is a similar opportunity like what we are doing in valves, but maybe in future it can grow to multifolds. So that is our anticipation. But as of today, what we think it's a similar opportunity. It will only give us some added advantage that when we give a value-added services, we can get a little bit preference on our competitors for supply. But maybe in future, once we deliver very good and results, when shipyards, our aim is to improve shipyards throughput. So if they find that their throughput has increased, and when we do a strategic tie with the shipyards, definitely it will become a huge opportunity. In the coming time. Yeah.
Are you open for more such JV, sir?
We are focused on our segment, which is valves, defense, water. So anything which can add to our services, we are definitely open. But something different than nature, then which will divert our focus, maybe we may not consider. But within our focus range, if something comes, we are open definitely. Yeah.
Okay. Sir, are we open to supply to Meson Sweden also in near future? Is Meson Sweden planning to source their products from us, like from Meson India?
Yeah, today Meson Sweden is sourcing. They are into a different kind of a segment today, Meson Sweden. Our Meson India is in non-ferrous. Meson Sweden is in ferrous cast iron valves. And today for cast iron, practically, frankly speaking, China is the Chinese
leader
competition. Even the Indian other, I'm sure the other Indian valve manufacturers who are in ferrous, they will also feel the heat of China.
Okay.
So we have not looked into that so far, but in future, when their Meson Sweden also wants to buy non-ferrous, we have worked on some couple of projects with them in the past, and there are already some projects where we are talking to them for non-ferrous application. So that window is always open.
Okay. So, but non-ferrous valves are having better margins than the ferrous valves?
Yes. Non-ferrous, they have better margins.
Okay. So, and how are you seeing...
Mr. Swarup wants to add something. Just a minute, please.
Yeah, please.
Yeah, there are better margins, but the valves to make non-ferrous material is very critical. However, we have that technology. We have our need and developed. So we have that technology, so we have the edge. That I want to say.
Okay. Okay. Sir, it was very helpful, sir. Very all the best, sir.
Yes.
Yeah.
Thank you.
Thank you.
Thank you. I request the participants to restrict with one question in the initial round and join back the queue for more questions. Next question comes from Jitesh Parmar, an individual investor. Please go ahead.
Hi. A great set of numbers, sir. Congratulations. I have a couple of questions. Okay. First one is, sir, what would be the industry-wise breakup if you look at, say, oil and gas, okay, or shipbuilding and naval defense, okay? Is it possible to, kind of share the percentage revenue breakup by industry?
I don't have it ready. If you can send this question or to our IR, we will be able to answer you this definitely. So IR will
no problem.
IR will give their numbers. Just write an email. We will share you the complete answers. No issues at all.
Okay, sir. Sir, but what do you see in future? Okay, for next couple of years. Okay, what would be your breakup like? Okay, where you would like to invest? I understand defense is a very hot industry, but how do you see the revenue?
Yeah. So Mr. Kishore Makwan, our CEO, can answer this better than me. So Mr. Kishore, can you please answer?
Yes, sir. Yeah. So basically, what I understand, that question is that percentage-wise industry sector, correct?
Yes.
Hello?
Yes, that is the question. He wants what will be our breakup in earnings in defense and other industries, basically.
Correct. Yeah. As Mr. Bijit told initially, that at present our focus was in the defense, and past few months or years, we have already put our all inputs, everything, to develop our product which will be ready for the defense production, the marine and defense for that. Because as you might be aware that to supply marine and defense, we require a lot of certification, lot of new testing for the wall, lot of type testing certificates, lot of inspection, phase-wise inspection, everything. So we have concentrated all our activities related to complete the certification and testing, so that our product will be very well acceptable and will be one of the quality brand in the sector of marine and defense, which is our core sector for this. But while we are concentrating on the core sector, yes, we have so many other sectors also which are very much useful for us, as I have already told in the previous question for this. But if you want percentage by breakup, so at this stage it will be very difficult to calculate it from the percentage wise. But yes, what the present data is with us now, we are supplying to the power sector more than 3,500 volts, and now we are having an inquiry for the repeat supply of the same thing, which is end user is NTPC. Apart from that, we are regularly receiving the repeated inquiries for the oil and gas and aviation sectors also. So in future, once our facility upgradation will be there, so definitely whatever our spare capacity, we can concentrate on all the other sectors, and at that time the percentage wise, because see, ours is we consider it as a tailor-made product. It's not mass production. So in a tailor-made product, it will be very difficult to bifurcate the industry-wise sector. And yes, usually we are already developing our products is in marine and defense field. So definitely our percentage in the marine and defense is on higher side. But in near future, our all other sectors can also be increased.
Okay, sir. Thanks for that. And sir, what is typical, kind of a seasonality that we see between H1 and H2, the kind of breakup that we see, for a given year?
Sorry, can you please repeat? So we did not.
So what is the typical, H1, H2 percentage breakup that we see for an annual result that we see, what type of seasonality we see? Is it 60-40, 30-70? How does it work between H1 and H2?
Sectors differentiation. I mean, this is
not sector, but in terms of, your revenue, what sort of split do you see between, H1 and H2?
70.
First half and second half.
40-60, 30-70, 40-60. That kind of it is.
And H2, I think H2 would be stronger. Is that correct?
Yes, definitely. We are doing all these things now. We are integrating foundry. We are pouring into different way, adding some more products. So this kind of consolidation also needs a lot of efforts. So the H2 definitely will be stronger because of this. Yeah.
Okay, and sir, last question, if I may. So what is the capital? Yeah.
Can you join back the queue, sir?
Sure, I'll do that. Thank you.
Thank you, sir. Next question comes from Rahul Jain, an individual investor. Please go ahead.
I am audible, sir?
Yes, sir.
Actually, sir, I want to ask in water treatment, as we are so confident about water treatment, every kind of industry require a different kind of treatment. Like saline water, it require different treatment. Then industrial wastes, it require different treatment. So, did you get this technology for all kind of wastewater? And you are so confident about your team. So, can you little bit inform us about that?
Dear participants, kindly stay connected while we connect the management team back on the call. I welcome back the management team. Please go ahead, sir.
Yes, sir. Am I audible now?
Yes.
Yes, sir. Sir, I want to ask question about water treatment. I was asking, every industry have different kind of requirement. Like for saline water, we have different requirements. Industry, we have different requirements. Then civic body waste, we have different requirements. So, did we get this technology for all kind of waste? And we are so confident about our team. So, can you give us little information about your team for wastewater treatment?
So, no, there are guidelines laid down by BIS and WHO. So, we are meeting that requirement. So, seawater and other things, that is for drinking water. When it comes to STP and water treatment, the guidelines are very clear. We are meeting the guidelines. It can be any industry. The guidelines are almost similar.
Also domestic.
And when it comes to drinking water, we are not going only into desalination, seawater. We are into water treatment. For drinking water, we want to in future come with non-electricity based membrane systems for domestic also. And that is one of our focus product portfolio actually. But the industrial guidelines, BIS, WHO are similar, not different.
But sir, technology will be different for different kind of waste. I mean, in industry, if I spoke about chemical waste, so there are different kind of chemical waste also. So the technology which we require to purify this kind of waste, it will be different. So did we get all kind of technology for this waste?
So, see, when it comes to this treatment of industrial effluent, definitely the technology is similar, but there are these adders. If there is output is phosphorus acid, sulfuric acid, if there is other acids, then that particular chemical dosing has to be done. There are adders. These our scientists our chief technical team. They study each and every product, and accordingly they suggest what kind of chemical dosing or has to be done so that particular output which is there is eliminated and the water which comes out is meeting the BIS guideline. These kind of things they decide particularly on the reports what the industry provides and what kind of requirements are there. These are what you tell is a specific requirement of a particular industry. I think we can provide solutions for any kind of industry when it comes to water treatment. We don't see any issues with that.
Okay, sir. Thank you. I will back in queue.
Thank you. We have a follow-up question from Nahima Rathur from Tiger Assets. Please go ahead.
Hello. Am I
Please
audible?
go ahead, ma'am.
Yeah. So, I just wanted to ask, what percentage of revenue is allocated to R&D, and can you provide examples of any initiatives on the impact that it has on your product portfolio?
So now we have not allocated in the past for R&D, but with the inclusion of these waters, with starting of this new venture water and also foundry, we will consider we'll allocate some fund for R&D because that will be the need of that product to continue doing some kind of research so that we keep on developing.
And we want to adopt the automation also.
Okay.
Yes.
And you said you have capex plans, so if you could quantify a number for the same.
So I will pass on this question to our CFO.
Okay.
So Mr. Vijay Shah will give the answer.
Can you please repeat your question, please?
Hello? Hello?
Yeah.
Yeah. So I wanted to ask about the capex plans that the company is planning.
The future planning of capex.
Oh, you are asking about future planning?
No, the capex. Yes, the present and if there are any future capex that is planned.
The present.
Present we have around 15 CR capex. So and we are planning to have some more, we are planning to have some more machineries, technological machineries in future, so we can enhance our productivity also with good technologies.
All right. So 15 CR for FY'25. Is that correct?
24 is for FY'24.
Okay. All right. And 25, if you could quantify a number, please.
Yeah.
For 25, no, that is in planning. But once it is all actually in the planning process. So if you maybe in couple of months send an email to our IR, they will give you the exact figure. Yeah.
Okay. And if you could give me probably the margins for FY'25, if there are any targets that have been set.
We are looking at a sustainable growth. What we are thinking is 25-30% growth year on year. So we hope that will also show up in the margins as well. Yeah.
Okay. All right. That's it from my end. Thank you.
Thank you.
Thank you. We have a follow-up question from Agastya Dev from CAO Capital. Please go ahead.
Audible?
Yes, sir.
Thank you again for the opportunity. Sir, again, a clarification on the seasonality of the business. So if I look at this year, financial year 24, H1 was 20 crores revenue, H2 was 40 crores, which is in line with what you said, that H2 is almost twice of H1. So is this what we expect going forward as well, this kind of variation in H1 and H2?
Yeah, this year definitely there will be similar trend. There will be variation because We are doing a lot of consolidation, like adding new products, doing backward integration.
I got it, sir. I got it.
Yeah. So it will be a trend for at least a couple of years. Once you are at a particular level, once your things are set, things are in auto mode, then this trend this trend becomes, both the quarters try to equalize. But till that time, I think this company is a growing stage, so always there will be this kind of trend you can see.
So for September 23, sir, you were still operating at 100% utilization. March 24, you were definitely operating at 100%, but September was also it would have been 100% had it not been for the season.
Exactly. Yes.
Okay. So no new capacity was added between September and March.
No, we added, no. In March, we added some capex. We added our patterns, capacity. That's what capex. We added patterns. We purchased a lot of patterns, additional patterns. So definitely that also increased our capacity. Yeah.
All right. So, sir, the JV that you have formed now, when will that start generating revenue for you?
The management will be in place from September. But at the same time, we are liaising with the concerned authorities for upcoming projects, putting what value-added services we can provide. All these things are in discussions. But the full-scale management will be in place from September onwards, 1st of September onwards. So we think that the second half, we can see some revenues coming from the street. Yes,
we'll see some revenues in the second half. And sir, if I look at your company, other than the manufacturing part, is there any other source of revenue? Do you offer any services, any consultancy revenue, anything other than manufacturing, sir?
No. We are not providing, but we may because now since this water is there, by the water treatment solutions, people are asking us to give solutions in terms of not only.
Hello,
sir. So just
I'm there.
Moment,
I don't know whether.
Just a moment.
I think they have dropped. Yeah,
Dear participants, kindly stay connected while we connect the management team back on the call. I repeat, dear participants, kindly stay connected while we connect the management team back on the call. I welcome back the management team. Please go ahead, sir.
Yes.
Yes, sir. So I got the answer to the question that I asked. Thank you very much, sir. All the best.
Yes.
Thank you.
Thank you, sir. There are no further questions. Now I hand over the floor to Kaushal for closing comments.
Thank you very much.
Thank you everyone for joining the conference call of Meson Walls India Limited. If you have any queries, you can write to us at info@confidelib.com. Once again, thank you everyone for joining the conference.
Thank you.
Thank you very much.
Yeah. Thank you. Thanks a lot.
Thank you, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Ventura Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.